Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Well, a couple of interesting stocks top this week's list of aggressive growth stocks, and Bill Wilton, our aggressive growth stock strategist here once again, to give us all of the lowdown on both of these companies. Now, the first one is Brunswick Corporation, BC, the ticker. And when you think of Brunswick, you think of bowling and billiards, right?
Yeah, but they also do have a couple other units that they run. They make marine engines under Mercruiser and a couple other brands.
Yeah.
They also make fitness equipment. So.
Oh, I didn't know that.
Yeah, so they've got a fairly diverse type of products that they make, but they are all pretty economically sensitive. Which is why it was kind of a surprise to see that they reported their best operating results in 5 years, is what the management said. They saw the top line grow about 8%. Earnings per share, thanks to a couple adjustments, came in at 33 cents, which was well ahead of the 6 cents that analysts polled by Zacks were expecting, and that put them back in the black. They have been reporting losses previously. This year and next year, they're supposed to be posting pretty sizable gains. And when you go ahead and look at the valuations, we're talking about 12 times next year's estimates. The price of sales is about 0.4. So there is some decent value in this one as well. As far as the chart goes, they were kind of tapering off along with the market skittishness over the past few weeks, but they did rebound sharply the past couple days on the strength that we've seen.
Cool. Allot Communications is another company that you've written about recently, ALLT, the ticker symbol. What type of communication company is this?
Well, they do IP products and services for mobile and fixed lines. And the interesting thing about these guys is, they're heavily reliant on Europe and the surrounding areas. So it was kind of surprising to see that they had some impressive growth. In fact, their European business grew 60% in the last quarter that they reported, which was back on November 1st. That led to an earnings surprise, which we always like to see. Estimates are moving higher. Also some pretty good valuations on this one. The PE ratio looks a little bit scary when it's north of 40 times like that, but there is enough growth there to make it worth it as far as the PEG ratio is concerned. If you're looking at price to sales or price to book, those are also pretty high, though.
So are they based in Europe?
Yeah.
And so the Eurozone issues are not affecting them at all?
Well, I mean, they're still getting the growth, and it's kind of because it's such a growing market. I really don't know what can hold them back at this point.
Okay, that's interesting.
And you can see that in the share price as well. Just shares keep heading to the upper right-hand corner of the chart, which is exactly what you want to see. They did cool off a little bit. Started to get a bit overheated, but it looks like right here people are back to buying in. So,
own either of these two?
I do not.
All right, check out more stock pick ideas on our homepage at zacks.com. We put 4 new ideas up there for you daily, one in each of the investing categories that we write about on the website. With Bill Wilton, I'm Terry Ruffalo.